What's up, guys? Kim's here. I want to take you through this volatility 10-1s, how I analyzed it. So, basically, I normally go to the 24-hour chart. Basically, when you're on the 24-hour chart, as you can see, the direction of this market, obviously, it is on an uptrend. And you know, in the market structures, basically, we have an uptrend market, we have a downtrend market, and also we have a range in market. So you can trade either of them, but I prefer when I trade either a downtrend or an uptrend. So basically, as we are here, I'm trying to remove this because I had analyzed it, so I'm just to do it afresh. So basically, as you can see, it's an uptrend, and you know, in an uptrend, the market makes what, higher low, higher highs, higher low, higher low, higher highs, these are the higher highs, and you have the higher low here, higher highs, higher low, then higher highs again. Yeah, so basically you get the point. So when you know that, basically, when you know the market is making higher highs, when you know the market is making higher highs, so obviously, and it's on an uptrend, you'll be looking to enter at the lowest point, which is the higher low, then you buy up to the high highs basically. So like here, when you look at this one, you buy from there up to that place, then it goes down again, you buy again up to that point, goes down again, do the same, goes down again, you do the same, goes down again, do the same. And now lower on the lower time frame. So when you have that in mind, the next thing is to mark out your points of interest. Never forget to do that. So we'll zoom in a little bit. Remember, guys, also points of interest also areas of impulsive movements, like this area here. You see an impulsive movement on the downside. So basically, knowing that, and you can see here the market went down, and here there's some consolidation that is happening here. So with that, I normally like to change my market also to line graph to see a little bit clearly what is going on. You can see clearly it is on an uptrend. Yeah. So with that, now we need to mark our zones. So as you can see here, this is the most recent swing low here. here. No, often it has to be broken for the market to go down, but if it doesn't break, obviously it is continue to go up. And you can see this impulsive movement which was happening here. Always good to mark also on the impulsive areas, but firstly I'm going to mark or label our swing high, which is this part. So it is for us to continue on an uptrend, it has to break our swing high, basically. So that's our swing high. And if I was to mark one of my points of interest here on the where there was an impulsive movement, I'll obviously draw it on the body of this, the opposite candle, exactly there, and you can push it down the way you want. So basically here you can see forming something like a somehow like a double top here, double bottom, sorry, here, like a W here down. So basically you see this is what do you call it, this is the resistance here. So this market went down here to the demand zone, which is up here. Then the market went up to retest the supply zone, which is here, then back again. So remember we said the point of interest, we mark areas where there is impulsive movement, like this bullish candle that went down. Also we mark the opposite candle, which now will be our demand zone. So our demand zone, can pull this onto the side, no problem. Demand zone. So let me label them. Supply zone. But I don't think I'll label them right now because you can see here this is the another thing how you know also a market is in an uptrend, because when you look here, this is the resistance here, but when you look at this one here, it is acting as a support on the other side here. It is forming like an M here. For here it is a resistance, here it will act as support. That's why I'm also convinced it's going to buy. So basically this is the supply zone and demand zone. Again, as I told you, always look for to mark your areas from the points of interest, like here. There's an aggressive sell on the downside, the market went back again to the supply zone, and then now it went down, it tested the demand zone and then went up again. So it is this is a textbook example of how the market went from the supply zone to the demand zone, back again to the supply zone, tested again the supply zone, tested again the demand zone, and then went up. So again it's going to test this new support zone here, which is the support down there again, and I believe it's gonna go up. like that. So you see it's formed something like a W. Yeah. So basically that is the analysis of that volatility trend 1s. So with that in mind, let me delete this. With that in mind, we have marked our areas, and so we know we are going to be expecting this market of ours to tap in our support zone and collect some liquidity around here and then shoot up. So this one will go like this here, collect liquidity here in the support zone, which will be the supply, which will be the demand zone, sorry for that, and then shoot up, shoot up, and then get together there. Yeah, basically, and that's why you check the market from the higher time frame to know the direction of the market. Then you move to the lower time frames to be able now to look for entries. So again, we have looked at the 24-hour chart. So we go down to the 4-hour chart. We see if there are any other point of interest that we can label. As you can see, this is our point of interest that we drew first. This was the resistance zone that we drew, and this one is the demand zone. Again, as I told you, now you can see here that the resistance zone which it has formed here. So I'll be expecting this market to go down to test this zone, which is now our supply zone here, and then to go up. So when I look at the 4-hour chart, again, if you were to draw another point of interest, remember guys, I told you, remember points of interest to look at the areas of impulsive movement, like here. These are, let me label it. This bearish movement, bullish movement to the upside. You see? So let's label it. So basically, remember we said you always label the opposite candle. Yeah. So this is our supply zone on the 4-hour chart. And again, even without labeling, our demand zone will be this area here. So basically, what happens? Because the market now went up after this candle closes, you expect obviously the market to go down, test our demand zone, then go back again to our supply zone, and it can also try again to retest our area and then continue to go up or go down, test again, retest a little bit here, then go up. See, now when you look at this one here, the market tried to test the supply zone, but it was unable, so it's going back down here. Okay, so like this area will be our new high. This area is our new swing high here. This is our new swing high. I hope you can see that. So that is our new swing high. So for us to continue on an uptrend, should break this swing high, and our swing low, you can see here, if it breaks there, it breaks here. So again, we have drawn our points of interest. So we're expecting the market will go down. Here, trying to retest, it was unable. Going down to test our demand zone again for it to continue going up. As you can see now, the market is collecting some liquidity here, because already I knew some guys were in buy in these areas, and where they have put some stop losses, so the market will be trying to go down, maybe collect liquidity down there, and then continue going up. I normally check the 24-hour chart, then the 4-hour chart, then I go to the 1 hour. Obviously, as you continue to go down, you look, check the market where it's clear, again for you to see, because basically everything is here for you to see. But when I change it maybe to the line graph, you can see it from here. If I could have drawn like a neckline, that design, line graph. Was to draw one line from this side up, and come back again. So see, it touched this place, went down, came close, now it's going down. I believe now the market is collecting some liquidity. In those areas. So sometimes you put it in the line graph for you also to see clearly what is happening. What is happening. You can see basically when you find a market like this, basically like it has broken that neckline here, and it is going down to collect some liquidity where someone can enter some sales, because this market is going to go down up to those areas. The market is going to go down. The market is going to go down, so someone could take some sales there. Someone could take some sales and to give an entry here to some of my students. Market could go down. I'm gonna give them an entry there. And sell return S. No. So we are selling return. We are collecting liquidity to the downside. Hey guys, we are pumping a lot of liquidity to the downside. So I hope you have entered that sell. Just enter with a big lot size and trail your stop loss. We are moving down to the demand zone. So the market will pump a lot. The bullish candle will continue to go down because you want to collect liquidity in those areas. So if you entered when I said, you should be in deep profits. Cheers guys, I hope you are making money. Look, it is pumping seriously. You have to collect liquidity. You have to take out these people who have hidden stop losses here. It is pumping like crazy.